for the first quarter of this year, about 3.2 million contracts were traded on the Afex Commodities Exchange, valued at 55.6 billion naira in 1,334 deals. For details, here is Michael Martin, Portfolio Manager at Afex. Hello, Michael. Good morning.
Hi, Chimeze. Good morning. Thank you for having me once again.
Good morning. So you are looking at activities in the first quarter. Bring us up to speed with that.
Yes, so as opposed to what we usually do on the commodities market update, we're going to be going through what has happened on the exchange over the course of the first quarter of the year, and that's considering the months of January, February, and March. And I must confess that we do have a fair number of data to go through this morning. So without further ado, let us just dive in. So the total number or the total value of contracts traded on the exchange over the course of the first quarter of the year is about 55.6 billion naira. And also the total number of contracts traded on the exchange over the first quarter of the year totals around 3,158,386 contracts. The total number of deals that we also traded in the first quarter of the year totaled around 1,334 deals. With regards to the indexes, we have, first of all, we have the ACI, which is the Afex Commodities Index, comprising of commodities like maize, soybean, paddy rice, and sorghum. It started the quarter at around 320.58 points and then ended the quarter at 392.23 points, showing a quarter-to-date gain of 22%. Over the course of the quarter, the highest that we saw the ACI gain was 406.35, and the lowest we saw over the course of the quarter is 319.33. As opposed to just the ACI, we also have the AEI, which is the Afex Export Index, comprising of commodities like cocoa and ginger. So it started the quarter, and that's on the 1st of January, started the quarter at 142.67 and ended the quarter at 159.35, showing a gain of just over 12%. The highest that we saw over the course of the quarter is 162.75, and the lowest that we saw over the course of the entire quarter was 142.67. And moving on to the volume of contracts traded on the exchange, as you would see by the chart in front of you, maize is the most liquid commodity on the exchange, trading almost 3 million contracts over the course of the first quarter of the year, accounting for more than 93% of all the contracts traded, of all the volume of contracts traded on the exchange. Secondly, we have Soggong, which traded 84,771 contracts. And then thirdly, as regards the volume of contracts traded on the exchange, we have Paddy Rice, which traded 27,162 contracts over the course of the first quarter of the year. I think the least traded commodity on the exchange would be sesame. Moving on from that, we have the commodities. We have the commodities in focus. So moving on, we have maize, which started the quarter at 16,099 naira per contract and ended the quarter at 19,400, showing a gain of just over 21% over the course of the first quarter. The highest price that we saw over the course of the first quarter was 20,572, and the lowest price that we saw for maize over the course of the first quarter is 16,099, which is the same price at which it started at the quarter. The next commodity in consideration is soybean, which started the quarter at 19,830 naira per contract and closed the quarter at 30,750 naira per contract, gaining more than 55% over the course of the first quarter of the year. I mean, if I must confess, soybean has been on fire this year, as opposed to, in comparison to all the other commodities under consideration. The highest that we saw soybean over the course of the first quarter was 31,650 naira per contract, and the lowest that we saw over the course of the first quarter is 18,523. The next commodity under consideration is paddy rice, which started the quarter at 19,250 naira per contract and ended the quarter at 19,695, showing just a marginal gain of just over 2%. The highest that we saw paddy rice over the course of the first quarter of the year was 19,700, and the lowest that we saw for paddy rice was 17,005 naira per contract. The next commodity under consideration is sorghum, which started the quarter at 15,033 naira per contract and closed the quarter at 19,195 naira per contract, showing a gain of just over 28%. And the highest that we saw sorghum over the course of the quarter is 19,395, and the lowest that we saw sorghum over the course of the first quarter is 15,033 naira. Another commodity under consideration is 98,000 is cocoa rather, which started the quarter at 98,214 naira per contract to end the quarter at 103,400 naira per contract, showing just another marginal gain of just over 5%. The highest that we saw the commodity over the course of the first quarter is 104,333. And then the lowest that we saw cocoa over the course of the first quarter is 98,214. The other commodity that is also under consideration would be ginger, which started the quarter at 73,767 naira per contract to close the quarter at 87,862 naira per contract, showing a marginal gain, or showing a gain rather, of just over 19%. The highest price that we saw ginger over the course of the first quarter was 91,653 naira per contract, and the lowest price was 73,767, which was the same price at which it started the contract. And lastly, for commodities, we have sesame, which started the quarter at 45,000 naira per contract. They also end the quarter at 47,617 naira per contract, showing just a marginal gain of 6% quarter to date. The highest price that we saw sesame over the course of the quarter was 47,617. And then the lowest price that we saw sesame over the course of the quarter was 44,780 naira per contract. And then lastly, but definitely not least, we have the fair trade exchange traded commodity, which started the quarter at around 11,832 naira per contract and ended the quarter at just over 14,000 naira per contract, showing a gain of just over 18%. The highest that we saw the contract trade, or the FETC trade, over the first quarter was 14,306 naira per contract, and the lowest that we saw the FETC trade over the course of the quarter was 11,365. So like I said, we had a fair lot of data to run over. And so that's essentially all of what happened with the commodities on the exchange over the course of the first quarter of the year, and also with the fair trade exchange traded commodity. And like we always say, if you want to know more about the commodities market, you can always go to our website, which is www.afexnigeria.com. And if you want to get involved trading commodities, you can download our COMEX app. It's available on Android and iOS. And you can also follow us on all our social media platforms at Afex Nigeria. So Chimeze, that is all of what happened in the first quarter of the year on the commodities.
That was a lot. That was a lot of data, like you warned us, Michael. Thank you so much for sharing it with us. Well, enjoy the rest of your day. But to talk more about this and the factors that might affect the market in the new quarter outlook is the Chief Executive Officer, Ayodeji Balogun of Afex. Good morning, Mr. Balogun. Thank you so much for joining us. Well, how would you describe the commodities market in the first quarter? I know Michael just gave us the figure, but could you put some flesh into those figures?
I mean, one word is volatile. We've seen maize surge by season to date about 41%, 21% precisely January to date, which is marginal comparing that this is just 90 days. And knowing that we're in April, we still have about 5 months to go before the new season. If you look at soybeans, has even been a lot more, with a season to date gain of about 80% and January to date about 60%. So we've seen quite a lot of increase. The trend has been upward, and I think that has also been generally inflected on the food basket inflation and the general inflation figure that we see in the country. The interesting part is that this is not coupled with what is happening in the global trend. Interestingly, maize international prices has also gone at about 40% from November till date. So we've seen this increase gone both locally and internationally, almost correlating for maize. We've seen soybeans that traded at the beginning of the season below parity price has seen that correction, and it's adjusted to very close to around parity price today.
Yeah, right. Now, looking at those numbers that Michael reeled out there, there's a fair bit of some kind of correlation with the commodities market, to which you would expect all commodities to move in the same direction. However, is there any reason why the ACI, that's your Afex Commodity Index, outperforms the Afex Export Index within the same quarter? And what factors would you say are really responsible for the performance recorded amongst the commodities in the quarter under review?
A couple factors. First, the export crops are harvested earlier than the staple crops. So ginger, cocoa starts their season a bit earlier than maize. Cocoa starts trading from July, early August. So you're seeing the end of their own season in Q1 versus maize and soybeans that starts trading in November, December. So you're still in the active trading months for those seasons. The second is that if you also look at the full data points, you'll see that cocoa and had a correction. So you had a correction in maize prices. So end of season last year, maize traded at about 195, 200,000 per metric ton. And then by the time maize started at the beginning of the season, it started trading at 125,000 with the new crop onset. So there was that correction that happened, giving it room to then rise. So today we're still trading maize at below the peak price last season. When we compare that with cocoa ended last season at about 800, 900. It started at a marginal difference of about 750, 800 this year, but had gone as high as about 8,000. So the price this year is higher than the prices last year. So that it didn't have that same correction that we had in the maize crop.
One of the things that Nigeria is dealing with at this time is inflation. So how well did the commodities perform as a hedge against inflation in the country, and how will inflation potentially impact the market going forward?
So if you had invested in the FEEC in November, December when it was listed, you would have had about 40% gain. If you had invested in maize, you would have had about 40% gain as well. If you invested against soybeans, you would have had about a 75% gain. So if you look at it both from a dollar hedge as well as an inflation hedge, it is still the most performing asset class in the entire capital market. And then it is real. One of the great things around commodities is that because it is tied to physical commodities that are consumed annually, and it is the price of what the industrial users use, you have that natural correction that happens within every cycle. Like I said, maize, for instance, reached the peak of 195,000, and at the onset of a new harvest, it came down to 125. But based on current trend, we're seeing that price adjust itself. So we're still mid-season. We still have Q2 and Q3 to go, about 6 months to go before the new crop happens. And we're still going to see some of these things trend continue to play itself out. A crop like soybeans, depending on where we see, but from where we look at data, we may still see about a 10% increase between now and end of the season. Maize may still go as high as about another 20%, depending on where we see. Part of what we've also seen, in terms of managing inflation has been the activity of some of the regulators to ensure that key players in the processing, the food and beverage, and the livestock sector can access some of this raw material in a price-controlled environment. So that's happened, and that's also helped to make sure that the price increase is not fully passed on to the consumer.
So what does Afex have planned out for the markets this quarter?
It's an exciting quarter that we are on. The first, we are excited about the input program. We're going to be doing the all-time largest input financing. We hope to finance 850,000 farmers across about 12 states this year. That's exciting to us because it's something that has tremendous impact directly to the farmer and their households, but also ensures the food security of the country. To put it in context, last year we did 35,000, and the total number that we've done for the last 5 years that we've operated is about 120,000. So this year alone, we should be exceeding the total number of farmers that we've given loans to over the first 5 years. So that's quite exciting. We are on the investment side going to be issuing instruments that will finance the export sectors. So we are excited about being able to provide liquidity, and that is very much needed for the country, understanding the need to increase the foreign exchange earnings of the country and the non-oil foreign exchange primarily. So we will be financing a number of the export players, providing asset-backed financing, warehouse receipt financing, and that's the first time we're doing that. The third part of what we're also pushing in preparation for the new harvest in October is a market where any trader, any feed mill, any food processor, any rice mill in a part of the country will be able to, from his mobile phone, buy the commodity they want to use. So you can log into the app, you can trade, and you can have a truck of maize or rice or soybeans delivered to your factory. And you could also, on that same mobile phone, access financing to support your trade. So that's,
all right, thank you so much.
You know,
we really have to stop there. Ayodeji Balogun, the CEO of Afex, thank you so much for sharing information with us. We really appreciate it. Well, we'll just take a moment and we'll be right back.
Awesome.